here we are with Jose Fernandez Aponte, head of crypto and blockchain at PayPal. Jose, it's so great to have you here at the Defined podcast. Welcome.
Thank you. Hello, Camila. Thank you for having us. It's fantastic to be back with you.
So just a heads up, Jose and I last spoke at South by Southwest. We did a great panel. So I'm excited to bring this conversation to the podcast. So just to, have a bit of history of PayPal's involvement in crypto, I would love to... if you could take us through how the process was for, PayPal to seriously start considering crypto, around what time was this, and what prompted this decision?
Absolutely. So we have been involved with crypto for the best part of the last 4 or 5 years. I myself have been involved with crypto since 2015, and I came back to PayPal in 2019, and that has been most of my tenure here, helping drive this. And the reason that we got involved in it in 2019 was because we were looking at ways to do payments and next generation payment rails. And the reason that I think is very important to understand that from a PayPal perspective, we're interested in the blockchain space because we are interested in payments. The aha moment maybe was when we were tinkering with blockchains and protocols back in 2019, and we started to run transactions at 100 of a penny per transaction. And if you can do that, and we were well aware that when we were doing that on the layer one, so 5 years ago, we were convinced that I'm sure that when we do this in production, it's not going to be as cheap. It's not going to be 1,000 times cheaper than moving money around on traditional rails. But if it is 10 times cheaper, we'll get that. And that was the overarching principle for us was we're in the payments business. If you look at a lot of the fintech innovation that has happened over the last 20 years or so, or maybe more than that, maybe even 50 years since the advent of the ACH networks and the credit card payment rails, a lot of the innovation that has happened has either been on the front end, on the user experience, or on fraud prevention mechanisms. And PayPal has been a big part of those two. But most of the innovation in the last 30 years or so still uses the same underlying rails to move money around. And we were squinting really hard at this technology and saying, you know what? I've been in payments for the best part of the last 20 years, and PayPal obviously has been around for longer than that. And many of us in the team were looking at the technology and say, this is the first time that we're seeing technology that can actually radically transform the way that we move value around. So we started with that. It started very small. It started with a blockchain research group, a few engineers, and some members of the team who were tinkering with the technology and trying to figure out what was doable. When we saw the promise of it, we said, you know what, this is something where we can help bring digital currencies to the mainstream. And that's why our first product that went live in 2020 was the ability to buy some crypto tokens on the PayPal app. So we opened that for a lot of the new users, folks who were crypto curious, who wanted to start to get to experiment with the ecosystem, but they were not experts in self-custody. They didn't want to deal with unhosted wallets. They didn't want to know about elliptic curve cryptography. So they wanted to have their first crypto experience with a brand that they knew and they trusted. So that's where we started. And since then, it's been a bit of a roller coaster. We went live in PayPal with those 4 tokens, Bitcoin, Ethereum, Bitcoin Cash, and Litecoin in 2020. We went live with Venmo in early 21. We started to go international. We are live. We went to the UK and we went to the European Union. An important moment for us was when we enabled on-chain transfers in 2022. Basically, the ability of depositing and withdrawing crypto tokens from PayPal and Venmo wallets to external wallets so that you can interact with the Web3 ecosystem from your PayPal account. And that actually changed a lot the profile of our users. We still have those crypto curious, that people who are having their first experience in crypto with us. But now more and more, we have people who are more sophisticated users who like the idea of having easy on-ramps and off-ramps through PayPal and Venmo for their Web3 activity. And then importantly, obviously, we launched our stablecoin PYUSD in the summer of 2023. It has grown very nicely. It's getting good distribution in many exchanges and wallets. And we are continuing to push on payment use cases for them. Remember, again, going back to the beginning, we are in this because we think that this is about transforming payment rails, and we think that there are very few entities like us who can drive and make this transformation mainstream, both in the C2C space, customer to customer, like we are doing in the remittance space with Zoom, B2C in commerce, and B2B in payments, in business-to-business payments and payouts. We are super happy with how the stablecoin is going. We are super excited to see that deployed in more and more PayPal experiences. Zoom, which is our remittance product, recently went live, enabling zero transaction fees on remittances that are funded by a stablecoin, and that is seeing very, very good traction in the market. So it's a bit of a trip down memory lane, but that's the story of the last 4 years and how we got here.
So yeah, the main reason you got into crypto was payments, and I saw that you announced crypto payments back in 2020. How has that evolved? And are you integrating PYUSD into that as well? Like, what's the status of actually paying with crypto for PayPal?
Yep. So for a few years now, as you were saying, since 2020, we have enabled what we call crypto at checkout for your listeners. That means that when you are buying using your PayPal account in most of our merchants, not in all of them, but in millions of merchants, if you have a crypto balance with us, you can use that as a payment instrument. So you will go to merchant X, click the PayPal button, and say you will be prompted on how do you want to pay, credit card, debit card, bank account. If you have Bitcoin with us or ETH or PYUSD, it will show up as well. So you can check there and use your crypto as a payment instrument. So which has been a very good way for many merchants to be able to accept crypto without having to do anything on their side. Because the way it works is if you choose Bitcoin as your funding instrument, we will then sell your Bitcoin, convert that into fiat, and settle with the merchant in fiat. So the merchant is not touching crypto, and they don't need to change anything or deal with the volatility. To your question, how much are people doing it? In general, what we have found is that consumers have thought of their crypto as assets more than payment instruments until now. So there is not a ton of people who are willing to use let's use Bitcoin as an example. They're holding Bitcoin because they believe in the ecosystem. They're holding Bitcoin because they think it's going to go up in value or not. They're not really thinking of that as a payment instrument for commerce just yet. We think there are a few things that are happening there that will make that change. And our idea, maybe 3 thoughts. We have transformation of payments will take time. I always tell the team, look, we are in year 4 of a 10-year journey. So these transformations happen over time. The second, I don't think that we should expect that neither for stablecoins and definitely not for more volatile assets, that we will see adoption for mainstream commerce in the US or Western Europe in the very short term. I don't think that you're going to go to your preferred merchant next year and see a button says pay with a stablecoin X and go there and do it. Because that's not where most of the pain point is today. But I do think that we are seeing a few emerging payment use cases that we want to nurture and we want to be a part of that have to do with things like anything that has to do with cross-border payments. Remittance is a good use case. That's why we started there. There is a very clear pain point that is very addressable by digital currencies and has to do with the cost, but also has to do with the settlement speed, with the ability of sending tokens that then you can receive on the other side in 10 or 15 minutes. So cross-border payments between individuals, that C2C angle, that remittance angle, we think that is already prime for transformation through digital currencies. Cross-border e-commerce. Most of the places, going back to your question of crypto at checkout, most of the places where we see that people want to pay with their crypto assets are usually consumers in one country who don't have access to an international credit card and want to buy from a merchant in a different country. So that's the most of the activity that you see these days. B2B payments. B2B payments is a really interesting one because the question is less about the cost and the cost of a wire transfers versus other payment instrument. It's actually more about the settlement time and in many countries, access to hard currency. So if you have the ability to pay a supplier in a different country, and you can do that with an instrument that you can buy with your local currency and will settle in 10 minutes and is available 24/7. That's a very clear use case. And the last one is probably digital goods. If you are a creator you're doing microblogs or you are doing any creative work or of any type, and you would like to charge $1 per blog read, or you want to do transactions of less than $5 or $10, current payment rates are very expensive. For those of your listeners who are less familiar with the payment space, usually the prices are denominated as a percentage with a minimum of X. And if you're doing transactions that are really small, that minimum of X is a disproportionate percentage of that payment. So if you can do on something that has really, really low cost, and you can remove that fixed component, then for digital goods, for items in video games, for microblogs, it becomes a much, much better, much more efficient payment instrument. So you will see payments emerge in cross-border, in digital goods, in B2B. I think that before you see mainstream adoption on B2C, I might be mistaken. I would be very happy to be wrong on that one. But I believe that you will see some specific use cases before you see the broader adoption on B2C.
Super interesting. Okay, so let me try to kind of summarize your view on crypto payments today. So there are basically three buckets: C2C, which is remittances, and what you're enabling now with sending PYUSD via Zoom. There is B2C, so payments to businesses, just like buying stuff, and then there's B2B, so businesses kind of paying each other, transacting with each other, I should say. And what you're seeing is that there's a bigger need for crypto in C2C, so cross-border transfers, and B2B for the issue of settlement times. I think kind of for businesses, like, time is really money. I mean, for everyone is, but like it's very important to get cash right away. Rather than for B2C, I think there are many different alternatives for people to buy things digitally, and crypto isn't the first thing that you think of, especially with Bitcoin, ETH. I mean, you think of those as assets to invest rather than to use for payments.
I think that's correct. B2C, there is a very clear advantage for the merchant. If you can give the merchant faster settlement and lower cost, I think that is not going to be an issue for adoption. But I believe that it will follow consumer adoption on the other side, because it is not clear yet is why you as an user in the US should pay with a stablecoin if you have other payment instruments. The value creation is there, the lower cost and the higher speed is there. The value capture needs to be defined yet between the consumer and the merchant. And I believe that will happen, as you were saying, first on C2C and on B2B. Just to qualify on the C2C side, cross-border is probably the most evident use case, remittances and the like. I believe we will see that also in domestic payments, because one aspect that payments have not solved yet is wallet interoperability. If I am using a PayPal wallet and you're using a different wallet and I want to send you money, before digital currencies, it was not clear how I could send you that money. We would need to both of us have the same app or the same wallet. And now we're having an instrument in which, as long as both your wallet and my wallet support, in our case, the Ethereum blockchain, but it could be a different blockchain, you can move tokens between wallets that are unrelated, and you achieve that interoperability. We're still in the world, if you think of the analogies, mobile phones, there was a time way back then where you could only send SMSs to people who were on the same mobile phone operator that you were. And that sounds really weird today. We all assume that regardless of who's your carrier, you will be able to send an SMS and we'll get in the other side. And that's one of the promises of this, that we will achieve true wallet interoperability.
So here you are speaking of wallets between two different fintechs, right? Not blockchain wallets.
Correct. Imagine in our case, we have the PayPal wallet and we have the Venmo wallet, and they are both part of the PayPal ecosystem, but they are different wallets. And Venmo became part of the PayPal family, I think it was about 10 years ago, probably a little bit more of that. And for the longest time, you could not send money directly from a PayPal account to a Venmo account. Now that we have the stablecoin enabled on both of them, now from your PayPal wallet, you can send a stablecoin to a Venmo wallet, and the other way. One of the companies that we have been working with is one of the most relevant wallets in Africa, and they are seeing users in the US sending a stablecoin from their Venmo wallets directly to that other wallet in Africa. So there is a number of reasons. Sometimes I spend a lot of time in rooms where people are asking, why do you really need blockchains to do this? We could do this without a blockchain. And the answer is, in some cases, yes, there are absolutely other ways to achieve wallet interoperability that don't require blockchains. The fact is that, at least in our case, until we deploy blockchains to use it, we didn't have a solution for that.
I think that's huge to hear that from PayPal, that there is a specific use case for payment, for transfers that you're not seeing outside of this technology. So going back to kind of the thread of the payments use case, and talking about this caveat that you said for why someone, taking the example of someone in the US, might want to use a stablecoin for payments, and that's a digital creator who wants to maybe take micropayments on their site or whatever. So yeah, like blockchains lower costs, but what about having those payments go through PayPal? Like, do you add your own fee to that?
I think when you think of micropayments, there are two parts of the cost that could be addressed, and both of them are important. The first one is just purely the cost of payment. So if you're that, going back to that component of there is a percentage and a fixed fee. If you can go to something where you can remove that fixed fee, there will be a fixed fee. And I do think that is actually healthy that payment providers in the ecosystem who are doing digital currencies monetize through transaction fees. We can talk about the monetization model for stablecoins in a minute, but I do believe that the logical and the rational way to monetize stablecoins as a payment instrument for a payment player is through transaction fees. And then hopefully we can make them lower than today and faster than today. But I still think that makes sense that the way of charging for the use of it is transaction fees. So that's one. And hopefully we can make the cost of payments cheaper in that space. Then there is the other one, which is unrelated to the payments part, which is how some of these creators traditionally have seen their apps, their downloads, their blogs happen through platforms, through marketplaces and app stores and others who capture a part of that. And you are seeing how more and more there is a push toward some of these creators being able to monetize their art or their product or their work or their literature more directly. And being able to establish a direct connection between the creator and the consumer, where there is a payment instrument that goes straight from the creator to the client of the creator, is something that can also be enabled here. There are other components in which those platforms add a ton of value, but we do believe in choice. Is something that we have been deploying as a company for many, many years. And we do think that there should be multiple ways in which creators can take their work to market.
Protocol 20 introduces Soroban, which is Stellar's cutting-edge smart contracts platform. This creates new surface area for innovation and provides new opportunities for developers to build protocols and products that create access to everyday financial services. So it means a gradual increase in transaction capacity and a chance to fine-tune applications. And it's the most transformative upgrade to the Stellar network to date. Woohoo!
I wanted to ask you your thoughts on Stripe recently announcing crypto payments, and how that compares to your solution. Like how is it different? I saw maybe one difference was that you're able to fund the payment with an external wallet, and it sounds like at PayPal you need to have crypto inside the PayPal wallet to fund it. Is that kind of one of the main differences? Is there anything else? And just would love your thoughts on on their move?
So first of all, I'm not an expert on Stripe's product. I think that's a good question for the Stripe folks. What their product that, but they do in terms of as from general points of view. We do believe that the advent of digital currencies for payments is a good thing. So the more the merrier. I think it's a good thing for the industry and for the ecosystem to see more payment providers that are coming into digital currency. So that's a good thing. We do have our crypto at checkout product is part of our branded checkout, meaning that yes, to your point, you need to have crypto on your PayPal wallet to be able to do it. You don't necessarily need to buy your crypto with us. So imagine that you have a non-custodial wallet and you're having some crypto there, and you decide that some crypto that you want to use for payments, or you are holding our PUSD stablecoin in your non-custodial wallet and say, you know what, I sold an NFT or whatever, I received the proceeds in PayPal dollars, and I want to use part of that for commerce, or I want to make payroll, or I want to pay one of my suppliers. You can move that stablecoin to your PayPal wallet. That's part of that on-chain transfer capability. You just do an on-chain transaction, you send the stablecoin in to your PayPal wallet, and then you can use it anywhere that PayPal is accepted. I think that's something that is a big advantage that I think we have against any other solution that provides funding with stablecoins and crypto, is that our merchants by default, most of them will already accept the crypto. So you don't need the merchant to go specifically and say, hey, we're going to integrate with Solution X to accept stablecoins. We have that today with our default PayPal integration. I think that's a big plus for us. And also, we are the fact that we thought a lot about whether we would deploy our own stablecoin or use one of the stablecoins that are available in the market. There were many things that we wanted to do with our stablecoins so that we could customize it for payments that led us into that way. So again, I can speak for our product. I think that's, but that is the way we see the world. And obviously, we welcome any payment providers that come into the ecosystem that help increase the acceptance of digital currencies.
For sure. And that's a great segue to talking more about PYUSD. So you launched your own stablecoin back in, I think it was August 2023. It's now at 300 million in market cap. And so it's grown really well. Just for context, the two biggest stablecoins are Tether and USDC. They have 100 billion and 30 billion in market cap. It's a PYUSD, like Tether and USDC, is fiat backed, right? And it uses Paxos as is it the custodian?
Paxos is the issuer.
The issuer, yes. Okay, so super interesting move by you guys to issue a stablecoin on Ethereum, backed by fiat, and one that's just interoperable that can be plugged into DeFi. So huge move, and so wanted to you mentioned this, but this decision to launch your own stablecoin instead of using existing stablecoins. What drove this? And you mentioned that it's the fact of having more flexibility to design this specifically for payments. So what are some of those features that PYUSD has that other stablecoins don't?
Yeah, so that's a really good question. So when we were thinking about it, just to describe, to bring everybody up to speed on what PYUSD is. PYUSD is a fiat-backed stablecoin, as you were saying, around 300 million in market cap now. That makes it a top 5 fiat-backed stablecoin by assets. If you look at on-chain volumes, we are at around 100 million per month, which has been just 6 months in the market. Importantly, sometimes this is a confusion that we hear from folks. You don't need to have a PayPal account to be able to engage with our stablecoin. It's an ERC20 token, so you can use it in places where there are ERC20 compatible, and you can buy it in a number. It's supported by most of the large exchanges out there and most of the non-custodial wallets. So it's a straight up ERC20 token. the vocation of our stablecoin is that it will be multi-chain. One important part is when we look at this space, very early on we decided that we didn't want to play on the blockchain or the protocol arenas. If you think of the crypto stack, there are blockchains, protocols, applications, and UX. We think that we belong in the UX and application space, and there is obviously an interaction with the protocols, some payment capabilities that will enable protocols, but we didn't want to have a PayPal blockchain. We didn't think that it made sense. We didn't want to be in a permission environment. We think that the value of this ecosystem is that it is open source and permissionless, and we wanted to be able to support the ecosystem in that way. And also, we didn't want to take protocol risk or blockchain risk in the sense that we believe that developers will decide where this ecosystem goes, and we want to support developers and we'll go where developers take us. We will not try to influence where that is. So we started with Ethereum because that's where most of the volume was and where most of the developer ecosystem was, but we will be deploying in other chains. To your point on why did we decide that it makes sense for us to have our own, and what is the pitch of a stablecoin? We do believe that you should use our stablecoin if you want a stablecoin that is highly regulated, is regulated by the New York Department of Financial Services, is issued in the US, is issued by Paxos, which is a limited purpose trust registered in New York, that is backed by a strong financial brand like ours, and that has very easy on-ramps and off-ramps into fiat. So we believe that PayPal's role in this ecosystem is to be a bit of a conduit between fiat and Web3. And we care a lot about providing ability for people who hold a stablecoin, but need, for any reason, they need to be able to withdraw that into a bank account, to do it through us very quickly, and the other way around. People who have fiat, but they find out that they want to pay a provider in a supplier in Southeast Asia, and they want to do that in a stablecoin, that they can move money from their bank account to the stablecoin to their supplier. So we believe that those are the superpowers: the strong regulation, transparency on the assets that are on the reserve, monthly attestations on what is in that reserve, the backing of a financial brand, and the connectivity to the PayPal network, both on the banking rails side and access to fiat, and also on our two-sided marketplace. Remember that we have more than 400 million users, consumers worldwide. We have more than 35 million merchants. And being able to open that ecosystem to people who are building on a stablecoin, we thought that it was something that at this stage only us could do. So that is a lot of what was behind us. There are two more, if you want, philosophical underpinnings of that. One of them is that I believe that we will see changes in the monetization model of stablecoins. Today, the traditional model of most of the volume of stablecoins, of those 150 billion that you were referring earlier, most of that volume happens on crypto markets, and a lot of that is institutional trading. And traditionally, the way that issuers have monetized the stablecoins has been through interest on the reserve. So they are fiat backed. So when somebody mints one token, there is a counterparty in fiat that goes into a reserve that is invested into assets. Those assets generates a yield. That's how the issuer has traditionally made money. I think that monetization model has been a little bit of an artifact of the interest rate environment today. So if you look 5 years from now, I expect and I hope that interest rates will be lower. But I also think that there will be a lot of what you're seeing that is happening on the asset management space. We've been talking a lot about payments, but also there's a ton of activity that is happening in the asset managers with BlackRock and Franklin Templeton and Fidelity and others. So I do think that we will see a decoupling between the yield component and the payments component. And I think that probably my vision of the future is if you are the CFO of a large corporation that is engaged in digital currencies and you have extra cash, you will keep that in something that is a tokenized money market fund or similar, and you will get your yield from that point. And then when you want to make a payment, you will convert that tokenized money market fund into tokenized money, which is what a stablecoin is, and then you will send the stablecoin. I do think that a stablecoin is an imperfect instrument for yield. Tokenized money market fund is an imperfect instrument for payments, and those instruments should be what they are meant to be. And then the stable coins will not be monetized on yield on the reserve. They will monetize on transaction fees. That's why we were saying, look, we optimize for things that are specific for payments. We care about KYC on our network. We care about throughput. We care about scalability. And it makes sense when you put all those things together, combined with our unique assets, the capillarity into fiat rails, and the consumer base and the user base. We felt compelled to launch our own because we're saying, well, we think that we have a right to play. We have an ability to serve consumers and merchants there. And we believe in choice. We need to remember those 150 billion in stable coins that are out there. I think that we are in the first inning of how this is going to evolve. And maybe we are at the top of the first inning. So I don't think that we should assume that the market is settled. Hopefully, we will see trillions in assets under management on stable coins, and the market will benefit for more entrants and from strong companies that want to have a presence in the market.
Have you heard about Safe? They're not just pioneers in crypto custody, but they're also leading the way with smart accounts. With Safe, managing your crypto is smarter and safer than ever. They've secured over $100 billion in total value and are available in more than 15 networks. Safe is also revolutionizing the industry with their full compatibility with ERC 4337, making it super easy to integrate wallets into your daily crypto activities. And for crypto enthusiasts, Safe has something special: the Safe Pass Activity Rewards Program. Launching soon, it's a fantastic way to engage and earn rewards. So what are you waiting for? Visit safe.global, sign up for the Safe Pass Activity Rewards Program, and secure your spot at SafeCon during the Berlin Blockchain Week. Be part of the transition that's setting a new standard in the world of custody. Super interesting take. I have a few follow-up questions. So, this take on a shift in the monetization model for stablecoins from yield on assets held to fees. So, so far, how much have you made on transaction fees?
We don't disclose the specific numbers on our products, and definitely not on the stablecoin. Yet it's not a large amount, but as I told you earlier, year 4 of a 10-year journey. I think that we are all on our side planting the seeds for something that we believe is going to be transformational.
So how much are, like, what are the fees for transfers with PYUSD?
On our system, so there are no fees to move fiat into a stablecoin or a stablecoin to fiat. So you bring your stablecoin to the PayPal side and you want to withdraw, we don't charge any transaction fee for that, or there is no spread. It converts 1 to 1. And if you choose to move it on chain, if you are either bringing it from, or you are sending it from a PayPal wallet or a Venmo wallet outside, you will need to pay the Ethereum network fee, but we don't charge additional fees for that.
What about when you're using PYUSD for payments and for checkout?
So when you use it as a consumer, if you're buying something with your PayPal account and you choose to pay with your stablecoin, we don't charge you. We monetize the merchant side. So in the payments industry, merchants pay something that is called the take rate. So the consumer doesn't pay. The merchant will be paying a take rate, but the consumer will not pay for anything. In the remittance use case, again, if you choose to fund the remittance with PYUSD, we will not charge a transaction fee for that. The way that the flow of funds works is we will get your stable coin. We will not charge you any transaction fee. We will convert that to fiat, and then we will send that fiat to your recipient in the other country. More likely than not, that's going to be a country that is not dollar denominated. So we will monetize that forex spread between the currencies. But for the sender on the use of the stable coin, they will not pay any transaction fee either. Okay,
so the way that PYUSD is monetized is with the merchant take spread and with the FX conversions in remittances?
Correct, which is and I'm not saying that there is not a reserve component these days. I'm just saying that in the long term, we believe that digital currencies will be monetized for payments in a similar way in which fiat currencies are monetized today. It would be super weird that we were going to think of, there is a PayPal balance today. You might have a balance in your PayPal account, you might have a balance in your Venmo account. But nobody thinks that we built PayPal to grow balances. We built PayPal to grow transaction volume and people having utility and making payments and sending money to each other. This is a little bit of the same. We think our view of the universe is that there are going to be tokenized versions of assets. And assets are different types. There is obviously a store value or e-money. There is commercial bank money, and there is central bank money, and many others. So we see stablecoins as the tokenization of store value and e-money, if you want, as the tokenization of your PayPal balance. It's not technically the tokenization of your PayPal balance, but that's the way we think about it. There are many colleagues in the banking sector who are talking about tokenized deposits. In our taxonomy, that will be the tokenization of commercial bank money. And then there are others in the space who are talking about CBDCs, or central bank digital currencies, which is the tokenization of central bank money. So when you think of that, if everything is going to have a tokenized version of it, that changes the nature of it, but that's not necessarily change the monetization mechanism. Hopefully we can make it faster and cheaper, but we still believe that the monetization will come through transaction fees. And in the case of cross-border, a relevant component will be the foreign currency aspect.
Yeah, that makes a lot of sense. But one innovation that we've been seeing with stablecoins is how some issuers have begun passing on the yield held in their reserves onto to users. Like Ondo Finance is doing this. It's a very different model, but Ethena USD also passes on yield, and so on. There's a couple other examples. What's your thought on this? I mean, is this something that first that you would consider as well? And do you think that even as rates hopefully come down over time, even if it's a smaller return, that could still be pretty attractive to holders of stablecoins? So maybe that it's something that that users may come to expect from stablecoins, this kind of additional yield. What do you think?
We're not contemplating that now. That is an aspect that there are a number of regulatory components there that get regulated differently in different markets. If you think of, as we think of our stablecoin as a payment instrument, then it makes less sense. I think people should be using that to make payments, and maybe they don't want to hold it to it long term and just have it when they are going to make a payment and move it around. But we are not contemplating right now that, and there are a number of regulatory implications that imply the structures that would be required to put in place.
Okay, no, that makes sense. So right now, PYUSD has been getting, like I mentioned earlier, integrated in DeFi pretty well. I think there's a Curve vault that has PYUSD. It was integrated into Morpho. I don't know if there's other places as well that's being used as collateral. Do you think most of PYUSD growth has so far come from DeFi?
We monitor the use of stablecoins, and obviously we keep an eye, and we can look at Etherscan as much as everybody else can look at it and see what are the main wallets. We are seeing growing adoption in DeFi, which I think is a good sign. It shows that the market has an appetite for alternatives, and they want to see other stablecoins. There is a sizable amount of that happens on centralized exchanges as well. So if you look at, again, it's still early days. 300 million is a good place to be in 6 months, but it's still relatively, in absolute terms, relatively small. market cap. So there is still some concentration there. I hope that we will see activity on the centralized side. I absolutely believe that we will see more activity on the DeFi side, and folks who are active in that space want alternatives. And also, I think that you will see more and more that is held in wallets that are more engaged in those use cases that we talk about, specifically on B2B and C2C to begin with. But we are very happy with adoption from users on the DeFi ecosystem. I think that it signals that there is an appetite and there is a space for more players in the space.
Why do you think DeFi users might prefer PYUSD? To me, it was a bit of a watershed moment when USDC depegged, and all of a sudden, Tether started gaining market cap, and it was a bit surprising because, covering crypto for many years, Tether was always sort of like the less trustworthy of the fiat-backed stablecoins. There's like all these, there has been all these questions about the reserves and the kind of the lack of transparency. But all of a sudden, the market kind of chose Tether. It was like the less of two evils, I guess, because at the same time, the decentralized stablecoins started adopting USDC. So not even DAI, if you were looking for like a fully uncensorable alternative, not even DAI was a good option because it held USDC. So like I said, all of a sudden, Tether was a good option. So maybe, do you think maybe PYUSD can offer kind of like a third regulated, trustworthy fiat-backed alternative when you're looking at kind of Tether versus USDC?
I do think that the market wants to have more alternatives. And I think that is healthy for the ecosystem that there are more alternatives. I don't think that we will go to a world in which you see 35 different fiat-backed stablecoins. I think that we will see a few stablecoins for general purpose, and they're going to be deployed on different chains. And I think that you might see some stablecoins that are specific for specific use cases. Maybe we will see one that is fine-tuned for video games, and maybe we'll see one that is fine-tuned for, for invoicing across countries. So the way that I think that the future will play out is going to be a few general purpose stablecoins, maybe single digits, I don't know, and maybe a number of those who are customized for some specific use cases. And maybe some of those are going to be for DeFi or for specific corners or DeFi. The markets always start somewhere, and it makes sense that at the very beginning, you have a disproportionate concentration of the market held by the initial players. But I think that is going to be good and will benefit everybody to see more alternatives there. If you ask me why are people using it on DeFi, I think that is twofold. First, there is an appetite for alternatives. And second, our pitch of well-regulated, transparency on reserves, issued in the US, easy connectivity to fiat, the backing of the brand, resonates with people. I think that resonates especially well with the institutional space, but I think that it also resonates with some of the more individual and retail focused folks who are in DeFi. Again, I think that very, very early innings, and this is everybody's work should be more on growing the pie now. I don't think there is a moment to be obsessed about market share or growing market share. I think it's important that the asset category grows, and especially I think it's super important that we see more utility. I think that one of the interesting questions always in the sector is how much of that 150 billion is involving transactions that have a utility in the real economy, how much of that is just sitting on top of assets. We prioritize. I actually pay much more attention to asset velocity, to the on-chain transfer volume that you see, than to assets under management per se. I don't think that assets under management is a metric that is especially important in the long term.
Yeah, it's a great point. For PYUSD within like its role within PayPal, do you expect that at some point PYUSD will become the main payments currency within the company? Like, is that part of the goal, or like what place does PYUSD have within PayPal?
So we are definitely deploying it internally, and we're deploying it in as many payment use cases as we can. Crypto checkout is an early example. Zoom is another one. One thing that we are working hard to enable is, if you look at our crypto products, and definitely that includes PYUSD franchise, now only consumers are able to hold digital currencies on their PayPal wallets. We want to increase that, and we want to make sure that the businesses who interact with us can also hold digital assets in their accounts. And there are a number of use cases that have to do. If you think of the beauty of working in the PayPal environment is, let's go back to what we talk about C2C and B2C and B2B, and those specific verticals on the B2C side that we talk about, cross-border and digital goods. If you're thinking that cross-border C2C is an important use case, we have Zoom, and we can deploy the stablecoin on Zoom, and we are doing that now. If you think that cross-border payments for SMBs are important, we have a company called Hyperwallet that does payouts to a number of countries. If you think that for businesses this is going to be important, we have 35 million merchants who have wallets with us. I think that is something where I do believe that nobody can beat our presence in terms of building that connectivity. So absolutely, we want to use it in more and more of our consumer and merchant use cases. And we want to use it in our internal operations as a company. I think that is important also, that, as they would say, with our dog food, we see more and more. For instance, if you look at our PayPal Ventures team, the venture investment activity that PayPal has, we are starting to have them write equity checks that are deployed on stablecoins. So we made an investment in a company called Mesh a few months ago, and our equity investment was denominated in stablecoin. There are opportunities to start to pay vendors who will accept that, and all of that will. And we have, as you can imagine, with a company that operates in more than 200 countries, our treasury operation is complex and is highly sensitive. And when we have the ability to move treasury around between countries in 15 minutes and not in 5 days, it's also something that is really exciting for our financial team. So we do believe that it is important that first that we capture the full advantages of the stable coins in our own operation, and also that we signal to the market that we are invested in the success and that we are seeing real utility for ourselves.
Okay, super interesting. So you're saying that beyond the integrations that you have right now with your stablecoin, which is cross-border C2C payments, we might we'll probably see the stablecoin also deployed across B2B transfers, right?
Without talking about the specifics of those ones, I think the general thought is you will indeed see our stablecoin deployed in more payment use cases inside of PayPal, and you will see some of those before the end of the year.
Oh, interesting. Nice little scoop there. Maybe I'll get another kind of hint of a future announcements. But you've mentioned the multi-chain aspect of PYUSD. Obviously now it's on Ethereum. I don't know if you can say kind of which specific chains you're looking at next.
I will not say names, but definitely there's a combination of two reinforcing factors. The first one is we want to be blockchain agnostic. We want to be, as we said, where developers are and where the ecosystem is. And also we want to we care a lot about payment use cases. And it is important that has some requirements of throughput and scalability that are important for us. So if you're going to be doing retail payments, you need to be confident that you can do at least 1,000 transactions per second. That's something that is highly relevant. It's difficult to be in the retail payments business if you can do less than that. And then there are a number of features that are important that have to do more with the smart contract platform and the features that you can put in. Remember what we were saying earlier about blockchain protocol application UX. There are some things that we need to implement at the protocol level, not at the blockchain level, but at the protocol level, that are easier to implement in some protocols than others, because you want an environment in which you can protect the activity of merchants. And there is a moment in which, if you're involved in on the B2C side, for instance, you need to find a way in which you can resolve disputes between consumers and merchants. And there are a number of features that are relevant for a payment protocol that are easier to build on some chains than others. So we absolutely want to be in more than one chain. We are very close to announcing our second chain. I'm not in a position to disclose the name now, but it is something that we will see in the very near future. And then we want to continue beyond that. I think that is important. We are observant of where the ecosystem is going. There's been a lot of evolution in the last 5 years. When I was looking at this in 2019, we were not even thinking of layer 2s, or we were starting to think about layer 2s, and we were thinking of similar to what I said about stablecoins, and a few general purpose ones and then some specific ones. I don't know yet what's going to be the environment that we're going to see in terms of blockchains. I don't know if we're going to have, of course, I hope and I expect that we're going to have multiple layer ones and not just one. But I don't know if we're going to have 6 relevant ones or 7 or 8 or 25, or there's going to be a few general purpose ones and then some specific ones. And what is the evolution of layer 2s is going to be highly relevant for this space as well. There is a lot of smart people who are working really hard on that. I have the luxury that I don't need to work that hard on that. I need to be expectant on what is happening and make sure that we can follow the developers and the technology progress there. But it's important that from as soon as possible, we signal and we deploy our intention to be multi-chain. And that's why we are super excited about being able to deploy on the next one. And I'm chomping at the bit to be able to say more, but I can't yet. Do
you have a timeline on when? Is this something that's coming kind of this quarter, or like how soon should we expect an announcement?
It's measured in months, not years. So it's coming soon.
One quick follow-up question I had on what you were saying earlier about all the ways that you want to integrate PYUSD across PayPal use cases and within PayPal itself. Does that exclude other stablecoins, like from your different payments use cases? Because you're now there's a conflict of interest because you have your own stablecoin in potentially adding other stablecoins to your payments and transfers use cases.
I wouldn't call it a conflict of interest, but obviously we are very invested in the success of our stablecoin. Is one that we spent a ton of time building a product that we can stand behind, and absolutely, definitely for the time being, we want to make sure that we can support and grow that ecosystem. So yeah, PayPal USD is a stablecoin that is supported inside the PayPal and the Venmo universe, and that's how we want to continue to act.
We've been talking about how important it is for stablecoins to get adopted in more kind of real-world use cases, the different examples that you've mentioned before. What do you think is missing for this to happen? I mean, you mentioned it's kind of maybe a matter of time for it to happen, but what are some of the enablers that you're looking at?
That's a really good question. I think that is several things. In terms of the value proposition, I think that as an industry, we need to help consumers have a more clear understanding of what's in it for them. What is the value? All those things that we are saying about transaction speed and lower cost and settlement time and all of that. As a consumer, how does that benefit you? You're saying you're thinking of someone who's walking around the US or Western Europe with a debit card and a credit card and a Venmo account and a PayPal account. What's in it for them? Why do they want to use this? Sometimes I am asked the question about a flavor of that question. Say, hey, there's a little bit of the Panglossian view of, no, but there is no pain point on payments. Why do we need something different? We live in the best of possible worlds. And my reply to that is that it's not that the revolution is not being televised. It's that some folks are watching a different channel. It's very narrow to just look at the world with a US or a Western European perspective. I've been This year, I've been spending time in Central America. I'm just coming back from India. I'm headed out to Southeast Asia next. Getting on a plane and moving around is actually very, very useful when you to see the promise of what better payments can do in some countries. And I'm not saying that blockchain is the Swiss knife that will help everything. There's a ton of innovation that is happening in some of these markets. If you spend time in India or you spend time in Brazil, there is very, very significant innovation that is happening that has nothing to do with blockchain technologies. But you get a very, very acute view that payments can be better, that the ability to move money around at low cost, fast settlement, and with finality for consumers and merchants is something that has relevant promise. What I don't think that we are doing a fantastic job is to making that tangible for consumers. I think that we can make the case. Obviously, the case has been made for investors and for the Web3 community. I feel very confident that we can make a strong case for the companies and the merchants and the SMBs and the creators. I think that what we are lacking yet is for someone who's not crypto adept, to someone who does not have laser eyes, to someone who is not interested in the technical side of cryptography, why should they be using it? And that's part of the reaction that we are seeing, for instance, when we deploy PYUSD on Zoom. Maybe people are not concerned about whether they don't want to, they don't have a requirement to use stable coins because they are committed to this sector of digital currencies or crypto. But they're sending money to their family in Guatemala and saying, hey, I'm going to get 0 transaction fees if I use this. I don't need to understand what happens under the hood. I just need to trust the instrument that I'm using, and I need to get value. Same thing that you should not need to understand TCP/IP and HTML to use a website. I think that we need to spend less time explaining the technical benefits of the protocols and the blockchains to end users and spend more time explaining to them the value and giving them a reason to adopt. I think that's probably the most important one that stands in the way of adoption. Adoption is happening. We've been running a study for the last, I think it's more than 2 years, where we run every 6 months, we ask a cohort of people in the US in terms of adoption of Web3 and digital assets. And we see consistently that almost, I think it's about a quarter of adults in the US have interacted with cryptocurrencies at some point in time. I think the number for stable coins is around 12%. And the number for NFTs are about 15%. So it's definitely past the hardcore of early adopters. I wouldn't claim that it's mainstream by any means, but I think that we are breaking out of that hardcore of early adopters. But the next wave, we need to do a better job because the mainstream users in general, there will just not be anymore with the decentralization aspect of it. They want to see value and have and see how a digital currency or a digital asset helps them do the job they need to do. And I think that this jobs to be done framework, which is one of the pillars of how you think of product design, as the industry grows and more people gets involved in the industry and we get more cross-pollination from users from other parts of the tech industry, that's something where I expect and I hope, and we want to contribute to make that a better part and a larger part of how we design products in the space.
Would it be fair to say that the way that crypto gets mainstream adoption is, the value it's delivering is cheaper, faster money transfers, more broadly, but then the way to get that to make it usable is via interfaces like PayPal, and that's kind of where your role as a company is to deliver this value prop, which is cheaper and faster money transactions, but in a more easy to use, understandable way.
Wow, there's a ton in this question. So maybe let me slice that in 3 levels, and it's going to get slightly nerdy, but I'll try to minimize the nerdiness. At a very, very high level. At a very high level, you need to understand as an overarching principle, what is the value of decentralized protocols? The way I think about it, and it's mostly an economic argument, activities, you can have something that happens in a market or something that happens in a hierarchy, in a company, or on a centralized way. So think of it as decentralized and centralized. Things tend to get centralized because transaction costs are high. You can operate a market, but there are search costs and bargaining costs and a number of costs that are involved with operating a market. If those transaction costs are too high, things get centralized. Why do I work inside of PayPal instead of showing up at the office every day and bargaining for the job that I'm going to do that day? Because that would be untenably expensive. So when the cost of enforcing a contract is too high, things tend to get centralized. So the value of this technology, and there's a ton of literature and at least 2 Nobel Prizes in economics that were given for that transaction cost study. The value of this technology is that it reduces the cost of transactions. It makes it easier to move money around. It makes it easier to enforce the contract because basically the contract is enforced by the protocol through the smart contract. So you don't need to be policing. I think that you did a fantastic interview to Chris Dixon the other day at South by Southwest. One of the things that Chris always refers to is can't be evil. So the contract will be enforced by the platform. So you need to be able to justify for something to be a good use case for a decentralized protocol that you are reducing those transaction costs. And if not, it's probably not a good use for blockchains. When you put that in the context of payments, because that will apply to different things. I'm not an expert in NFTs or the media side, but I'm sure there are good use cases there. If I put that, hey, let me understand how the technology reduces the cost of transaction. If I put that in my world, if I put that in the payments world, is many of the things that you said, is faster movement of money, finality, less disputes, faster settlement, scalability, and programmability. So there are payment use cases that I can do if I program that into a smart contract that I couldn't do on traditional fiat rails. And that's the underlying value on the payment side. And then going to your question and to my prior point, how do we make that evident for consumers? Because consumers will not care about markets and hierarchies, and they will not care about programmability. They will care of, I have a job to be done. I need to make payroll, or I need to pay rent, or I need to pay my supplier in Indonesia. How does this help me do that better? And better is important because if we are asking people to leave the instruments they have used in the past and adopt a new one, it cannot be 10% better. It has to be 10 times better. And it has to be, hey, I'm settling what it used to be 5 days, now is 15 minutes. What it used to be 9 to 5, Monday to Friday, now is 24/7. Just incremental gains of savings of 10% are not gonna cut it, are not gonna be enough.
Exactly. So we are getting, hopefully, this 10x better payment rails through a really nice interface. And hopefully that will bring the next billion users onto crypto. Because, obviously I've drank the Kool-Aid. I really do believe this will improve the financial system and will make lives better. So, Jose, really appreciate you taking the time, walking me through what all the great stuff PayPal is doing here. It was a fascinating conversation. So thanks again.
Thank you so much, Camila.